Kathy Wood is the intersection between thematic and disruptive tech and active management. So if you look at it, we just put this up, some of her funds have had some of the biggest declines for the year. She is active and thematic, really disruptive technology would be more accurate for her sense. Have investors seen some of this volatility all this year and said, you know, maybe that's not for me?
Yeah, I wouldn't say investors are necessarily done and completely out of the game when it comes to looking at some of the thematic active strategies. But I think part of it is thematics are still not fully understood by investors, and the fact that there can be increased volatility and there can be increased risk. That is what you're chasing when you're looking for above average returns outside of these passive broad-based indexes. So I wouldn't say they're necessarily out, but it's more important to have that plan in place, understand the risks that come along with some of these strategies before you actually, decide to pull the trigger and invest in them.
Yeah. And what about some of those risks, Jay? I mean, we're all seeing, Kathy Woods was catapulted into superstardom earlier in the year by making very bold bets, and everybody went along with her. I don't think anybody would disagree on the concept of disruptive technology really changing the world. I think everybody's bought into that idea. I don't think anyone disagrees with the concept, the philosophy around it. I think the problem now is what's the price people are paying. And obviously, this stuff, particularly a lot of stuff that doesn't make any money or doesn't have the prospects of making money several years down the road. There are times when it's appropriate to buy in and times when it's not. She has convinced a lot of people it was appropriate to buy in. Now people are debating what's the right price.
Well, I think the mistake that some investors might be making is thinking of thematic investing as only looking at technology. We see disruptive technologies as a big piece of thematic investing, but there's also trends being pushed by changing people and demographics. We have very powerful themes being pushed forward by the physical environment and our changing relationship with it. So just like we would diversify across asset classes, diversifying within thematic is key to avoiding some of these near-term risks. Actually, two of our most popular funds don't have very much technology in them at all. Our lithium and battery tech fund is mostly materials and industrials, and our U.S. infrastructure development fund, our fastest growing fund this year, is mostly just industrials. So looking outside of tech in the thematic space, I think has been key for investors to find that diversification and not just bet on long duration tech sector.
Yeah, thematic, we say thematic tech, but you can have thematic without having tech in it, as you mentioned on infrastructure. Pot last year was a huge, this time last year, pot ETFs were all over the place and pot investing, and look what happened to cannabis this year. It's sort of, it's another shiny object that investors sort of moved on from at this point. They've had a terrible year. They're among the worst underperformers, and yet that's a thematic. It's not a tech thematic ETF. So there's my point, though, Jay. Some of this stuff will go in and out of fashion. And there's your Global X Cannabis ETF, POTX. It's sitting essentially at a 52-week low right now.
Absolutely. These funds are going to be volatile in the near term and hopefully grow in the long run. And what we really try to educate investors on is expect that volatility, be prepared for it, and really be thinking, decades forward with where this theme will evolve. We know cannabis is not going to be legalized federally overnight. We know robotics isn't going to be adopted across hundreds of warehouses in the United States overnight. These things take time. And because these are concentrated portfolios that can be sentiment driven in the near term, there's absolutely going to be volatility. So by diversifying across themes, diversifying across different areas, whether it's technology, whether it's infrastructure, whether it's people and demographic led trends, I think that makes for a much more robust approach to thematic investing where we can weather these ups and downs in the near term.
Yeah. Alex, I note a lot of these thematic tech funds are down for the year. Put up something here. You can see some of these big names here. It seems like there's a lot of tax loss harvesting opportunities out there. Do you think any of that is going on here? Here's some of the big funds that are down this year in thematics.
Oh, absolutely, Bob. You look at across the thematic space, you've got a couple examples up here, but there's nearly 100 ETFs classified in the thematic space that are down at least 20% year to date. And even more so when you look at the enormous amount of flows that went into some of these themes in January and February of this year when they were peaking. If you're not looking at your portfolio right now when you have some of these positions, and taking advantage of the fact that you can take that tax loss, you can possibly reallocate. It's something you should be doing.
Jay, how do you address that theme? I mean, do you think tax loss harvesting is a factor? I mean, we've been noticeably weak in some of these thematic funds in the last week or so. And frankly, even stuff that was popular, individual thematic tech that was big earlier in the year with the Reddit GameStop. GameStop is a good example here. It's down again today. It's near the lowest levels in many, many months at this point. To what extent does tax loss harvesting come into effect right now for some of these funds?
Oh, it absolutely comes into play. I mean, tax loss harvesting is good portfolio management in a lot of cases. What I would caution investors, though, is that within the thematic ETF space, there's a lot of ETFs that sound similar but have very different holdings. There's about 6 robotics ETFs out there. The average overlap between those funds is less than 20%, though. So if you're selling out of one robotics fund and getting exposure to the next, just be very aware of what are the actual holdings you're getting in that fund, because it could be very different from what you have today. But absolutely, I think investors should always be considering tax loss harvesting, especially at this time of year. And the fact that we have more thematic ETFs than ever before gives investors more options, and ultimately that's great for the market.
Jay, you mentioned robotics that you're excited about potentially for 2022. What's the thing we haven't been thinking about? Is there something out there on the horizon, some new shiny object that's not quite gelled yet that you think could turn into a fabulous ETF in 2022?
Well, I really like the ag tech and food innovation theme. You know, we've already started to see it coming up as we think about climate change and droughts and wildfires and storms that are disrupting our food production already. On top of that, you have hundreds of millions of people entering the middle class in emerging markets, which is creating all kinds of new demand for more expensive foods like milk and proteins. And at the same time, we have these incredible advancements in technology that are allowing us to use drones in field management and crop management, autonomous tractors, genetically modified seeds that can be more resilient to disease. So I think we are about to hit an incredible inflection point in ag tech and food innovation as we come out of this pandemic and we reassess the supply and demand drivers of our economy at the most fundamental level, which is food and water that people need to survive.
Might we see an ag tech ETF from Global X in 2022? You seem to be. I'm trying to, let you set something up here.
We already have one, Bob. We have Crop,
yeah, that's right.
KROP. We launched it this year, but it's still very early in this theme, and I think investors. It's not front page news, and that's a good thing because we're still able to go to supermarkets and buy the foods we want. But there's a world where that could be more challenging going forward.
Well, the wonderful thing about this game, the ETF game and thematics is we don't quite know, and the ETF business has set itself up to very quickly move into whatever is an area of interest for investors. We don't know what it is going to be, but it's going to be very exciting 2022, and I agree technology is going to keep going, and I, for one, want a lot more of it.